Yes. So okay, fine. Then I know I'm audible to you people. We'll just go with the next part of it. So the next part is other expressly allowed deduction. So few of the allowed deductions we have already seen. So now the few allowed deductions we'll just see now. Okay, we'll just go with the next other expressly allowed deduction. Allow deduction. Apart from whatever we had studied above, so there are some other expressly allowed deduction. So those deduction here we see it under section 36, subsection 1. And what are all those deduction? We'll just see here one by one. The very first one we get it here, insurance premium paid. Insurance premium paid. If you are paying any premium on the insurance, even that comes and even that will be coming under expressly allowed deduction. Insurance premium paid, so that comes under premium paid. That will be, so just take down premium paid on insurance policy. On insurance policy taken to cover the risk of damage or destruction of stock Okay, insurance premium paid here comes like any premium that you are going to pay on an insurance policy that you have been taken just to cover some damage or to cover some risk. So you will be having your insurance premium here. And apart from this, we have health insurance premium. Health insurance premium. Coming on to health insurance premium, usually here the premium will be paid by an employer to other employees. So on that time, even that will be allowed for the deduction. Suppose if your wife is admitted in a hospital or if your children is admitted in a hospital, from your company you will be getting a certain amount. If they are admitted in private hospital, some exemption limit, and in government hospital in some exemption limit, that you will see in health insurance premium. So premium, you don't have any section. Under this section only everything will come. 36 subsection 1. Health insurance premium, it is nothing but premium paid by employer. Premium paid by employer. Premium paid by employer by any mode. By any mode other than cash on health insurance of its employees. For the employees, other than the cash, he'll be paying on check or he'll be giving some premium. So these are the things comes under health insurance premium. Understood? Okay. So the next thing comes here like that is your bonus and commission. Bonus and commission. Coming on to bonus and commission. So coming on to this bonus and commission, here it will be deductible. The bonus and commission, we do have some deduction based on the profits you get and based on the dividends that you are going to get. So coming on to this, the deduction or deductible in full, or you just take down deductible in full, as long as bonus or commission, as long as bonus or commission shall not be shall not be payable, shall not be payable to employers, as profits or dividends, as profits or dividends. Here it will be deductible in full, just based on the bonus they get, on bonus on the commission that we are going to pay. So that will be payable here, or based on the profit, or based on the dividends that they are going to get it over here. So bonus and commission, for this we have the section 43B. Okay, so this is the section related to this. So hope you people have written this. Now I'll go with the next part. I'll select it. So we'll go with the next part, that is interest on borrowed capital. Interest on borrowed capital. So coming on to our interest on borrowed capital. So even in the interest on the capital you have borrowed, suppose you have taken some capital, on that capital interest will be chargeable. Up to some limit, the deduction will be allowable over here. You can take down deduction allowed for any interest. Deduction allowed for any interest paid in respect of capital borrowed, paid in respect of capital borrowed, for business. So here you will be borrowing your capital, that is for the purpose of doing your business activity. Okay. And then we have the next part, that is employees' contribution to welfare funds. Employees' contribution to welfare fund. How the employee is going to do a contribution for the funds that has been relieved for the welfare of an employee. So this, coming on to this, here is a take down, deemed as business income of the employer, SSC, and will be allowed of the employer SSC, and SSC will be allowed as a deduction only, This you have to know, only as a deduction if it is in the case of an employer or an SSC. Here we usually call this income or this contribution as business income, and here SSC will be only for SSC will be doing the deduction, and also only for an employer we will be doing a deduction if employee contribution have been credited, if employee contribution have been credited to the employee's account, on or before the due date under the respective Welfare Act. Here they are telling that any contribution if an employee is doing, that will be credited in employee's account. That all contribution will go to his account only. That is before the due date only, he will be getting that amount on the basis of the Welfare Act. Okay, Welfare Act will tell how much share should be given to him on whatever the contribution that he is going to do it over here. Any doubts in this? Understood? Okay. So the next thing, apart from this, we have a certain other expenses. We'll see that other expenses. The next heading, other expenses. So the other expenses we see here under section 37, subsection 1, and we call these as a general deduction. Okay, this all comes in general deduction. So we'll see what are the things are included in the general deduction one by one. The very first one, expenditure should not be covered. Expenditure should not be covered under section 30 to 36. If your expenditure is not covered under this section, then we will be giving a general deduction for that. And the second point, the expenditure must be paid. The expenditure must be paid, or that expenditure should be incurred for the purpose of business or profession. For doing some business, for doing some profession, you have incurred some expenses, you have paid that expenses. You have paid, or that expenses have been occurred to you, that is for your business purpose or for your profession purpose. Even then, that will be coming under your general deduction. And the next third one that you have, the expenditure should not be in the nature of, the expenditure should not be in the nature of, the expenditure should not be in the nature of capital or personal of the assessee. Capital or personal of the assessee. So any expenditure that you get it over here, that will not come in the nature of capital or for the personal use of the assessee. If it is coming, then the general deduction will be allowable for that. And the next point, expenditure should not be incurred for, expenditure should not be incurred for an illegal or immoral purpose. So here, whatever the expenditure that you are going to incur, that should not be for an illegal purpose, that should not be for an immoral purpose. If it is for illegal and immoral, general deduction will be there here. And the last but not the least, the expenditure should not, the expenditure should not be specifically disallowed under the Act. It should be allowed under the Act. If it is disallowed under the Act, general deduction will be there. If it is disallowed, then the other kind of deductions will be there for this particular thing. Any doubts in this? Understood? Okay. So apart from this, So apart from this, we have maintenance of books. So how do we maintain the books over here? So that's our next part. We'll go with our next part. So here theory things are very huge, but coming on to the problems, it's a very easy. You can do that. So we'll go with the next one. Maintenance of books. Maintenance of books of accounts. How do you maintain the books of accounts? So that will be coming here under section 44AA. Under this section, we'll see our maintenance of the books. So take down the two columns again over here. The first column tells about your assessee. And then we have specified person. Specified person. And then you have non-specified person. Non-specified person. Specified person will be paid, he'll be an assessee and he'll be paying the taxes regularly. Non-specified, that person will not be specified under the rules like individual, HUF or any other assessees will be coming here. So here in the specified person, in that again take down all SSC. And below the non-specified person, the first column will be individual or HUF, that is Hindu or divided family. And the second column will be other SSC. Okay. So coming on to our SSC, the threshold limit. That means you will be having some limit, right, to do a transaction. That threshold limit. So here, gross receipt coming on to all SSC, the gross receipt should be greater than 1,50,000. Okay. So this is the limit for that person. If it is going to cross, then they have to maintain the books of accounts. And coming on to an individual, here, income from business or profession. If you are getting the income from that, it should be greater than 2,50,000 rupees, or your total sales or your turnover or your gross receipt, that is especially from your business or profession, should be greater than 25 lakh. Okay, that is in the case of individual. Here, your income from business or profession should be this much, or else your total sales, turnover, or gross receipts, especially from business or profession, should be 25 lakh or more than. Okay. So coming on to an other SSC, the other SSC is also the same, that is income from business or profession should be greater than 1,20,000. You can see the lesser amount over here, or you can take the total sales or turnover or gross receipt, that is especially from business or profession, should be greater than 10 lakh rupees. Okay, understood? Coming on to the next period. So for how many period we can consider these points? So we can take it as the next point as a period. So coming on to the period. So in the period here, in all 3 years, for all SSC, in all 3 years, immediately preceding the previous year. Immediately after the previous year, in all the 3 years, we'll be calculating or will be maintaining the books for an SSC. For all the SSC, the books will be there. But here in these two situations, the same point, you can take it together. In any one of the 3 years, immediately preceding the accounting year, okay. So after preceding the accounting year is nothing but the year in which you maintain the books of account. After the 3 years, in any one of the year, in 3 years, in any one of the year, immediately once you complete your accounting year, suppose if you complete your first accounting year, from the second accounting year, you start maintaining the books of accounts over here. And here the very important thing you have to know, that is take a note, if the business or profession is newly set up, if income or sale or turnover is likely to exceed the threshold limit, Suppose if your business is a newly startup business, if it is a newly startup business, everything you do it with all the Josh and all, so that you will be knowing like what are the things will be happening and all. So that you will be knowing like what are the work you have to do. So when you know all the work that you have to do it over here, just a minute. Okay, so this is the point you have to remember. On the income will be charging this threshold limit. So if your business is newly startup, you will be working on every Josh. So you will be knowing what is the amount that you will be getting. Your amount usually it will be in a high level, right? If you had started up your business, so that is what it comes over here. So hope you people have understood this part. Okay. So the next part, the next to last topic, the theory topic that we have it over here. So that is nothing but last topic. So in this, whatever we have said it till now, 1 and 5 BAC on Pgbp. So we'll see that impact of section, impact of section 115 BAC under Pgbp. Okay, so under Pgbp, what is the impact of this section? We'll just see. Under this, the first point, the additional depreciation. So the coming on to an additional depreciation. Just a second. So additional depreciation, the additional depreciation here, that is for a new plant and machinery. It should be according to the section 32 subsection 1 to 8. According to this section, we will be giving an additional depreciation for this particular asset. And the second one, deduction for investment. So when you're doing the deduction for investment, especially in plant and machinery, especially that too in backward area. So that backward area comes under section 3280 under the section we study here. And then we have deduction that is in respect of tea, coffee, and rubber. If you're doing any tea, coffee, or rubber businesses, then the deduction here it will be allowed under section 33AB. Under this section, we'll be giving some deduction for that particular thing. And then deduction, suppose if you are doing any kind of business, so deduction in respect of business consisting of extraction or production of petroleum. Suppose if you are extracting your petroleum or any kind of natural gas, and remember all these things will happen in India only. So then we do also give a deduction here. The deduction will be according to your section 33 ABA. According to your section 33 ABA, will give a deduction for this petroleum and all. And then we have a deduction for expenditure on agricultural project. If you are doing any agricultural product, again for that deduction will be coming under 35 CCC. These are the deductions. These are the section you have to know. In this, I have one table. I'll just share that table with you people. Just go through that. In that, all these sections, the further sections are given to you. Study that once. Okay. So here is about your theory part. So from here, your theory part is done. So the next thing, we'll just go with the next part. So the next is our problem. So we'll go with our problems now. I'll just share my screen to you. Yeah. So here is the problem you can see, income from business or profession. The first question, assessee does not himself carry on scientific research. Is not carrying on himself any kind of scientific research, but still is making a kind of contribution to some approved university, college, and equivalent for the institution. And here the scientific research that is unrelated to unrelated business that is of especially of an assessee. So then what is the deduction they are asking? The deduction here is 100%. I gave you one table, right? 100, 100, 100, 100. Only for biotechnology, I gave 150%. Okay, you have to remember this rate. 100% is for everything. And then we'll go with the next question. The next question, in case of companies, capital expenditure if you are getting, that is for family and all, then the employee, the deductible amount, again, equal to 1/5 of each every year of 1 by 5 years. So that especially in 5 years, for every year you will be doing certain deductions. So that will be equal to this. The same thing we said it in theory also. Again, important. And then we have the person carrying on the profession will have to get his account audited before the specified date, because he has to know like what is his liability, what are all his assets, right? Yes, I will, Samsunya. So all the specified date will be given over here, and that profession in the previous year or the years relevant to the assessment year is what they're asking, that is 50 lakh. So if his turnover or if his amount is exceeding, if his gross visit is exceeding 50 lakh, I gave you right now one table, all SSC, individual or HUF, in that table you will see this. Okay. See, if you are pakka with your theory part, then around so you can do this. So the rate of depreciation for temporary wooden structure, this usually comes temporary wooden furniture and fixature. It's again 40% over here. And then the Anjal owns the 6 goods carriage vehicle. So he is having 6 goods carriage vehicle other than the heavy goods. So out of it, 2 goods vehicles are acquired by 15th of January. His taxable income they're asking. So in 6, if I minus 2, how much I get? 4. So for 4, you will do it for 12 months. You get 7,500. So into 7,500, it's the standard amount you will be having. So if you multiply these 3 and add it with 2, again, because 2 goods has been acquired, 2 into 3, because from Jan to March it is 3 months, 3 months, and the standard amount you will put. So finally you will get this amount. And here the thing is you have to know the standard amounts over here. And coming on to the next question, the notional profit. This notional profit concept also I have explained you people. Notional profit, again, it is, if it is from the speculative business, it is not taxable. Okay. So it is not taxable over here. And then, so we'll just go with the 7th question. A person carrying some profession, he has to maintain the books. Again, preceding 3 years, right now I explained you that preceding 3 years based on the accounting year, he has to maintain the books here. And coming on to the block of assets, question number 8, if it is exists the last day of previous year, again, because the previous year is already done, so no need of charging it again. That depreciation will be for the next year. So for that year, the depreciation will be nil. So the remaining question, you have only few questions. So here they have some classes. So I have to wind up your session now. So these questions I'll be sending to through your WhatsApp. So you just go through these questions, okay? And I hope you people have understood.